And what's going on? How you guys doing? Been a while since we did this. Yeah, let's get to it. Just shout outs to everybody in the chat right now. If you know someone, tell them, join us live. All right. Send them the link. Okay, we got a lot to unpack here, but we have a trade forming and setting up here. Now, I'm looking for an entry right here. Okay. Let's go ahead and take a look at that. So this is going to be my entry at 25 to 80. That's what I'm looking for. So my risk is too large. That's just based at default on this settings here. Okay. So what I want to do is I simply want to put a buy order here. Um, and I'm going to go ahead and buy two NQs. Now, what I'm looking at is basically my confluence calculator right here, right? My bullish setup checklist. I have six out of six. This is letting me know there's a great deal of confluence here. Okay. And let me go ahead and fix something here really quick, guys. 1 second. Get this here. Let's here. All right, get that fixed. All right, cool. So looks like we got an order fill. This is great. Now, what I'm looking to do is to trust in this here, right? I'm not going to go ahead and let the candle spook me out. I'm going to have trust in the system. Now, when am I objectively wrong? I'm objectively wrong when my line breaks below this band and it closes. I'm also objectively wrong when I get completely stopped out down here, which is my hard stop. And of course, I'm absolutely wrong when GG flips. So we basically have a process of which we could say, all right, well, I'm going to be wrong on a break of the band. I'm going to be wrong when it hits my stop, or I'm going to be wrong with the GG flip. Now you need to size accordingly. Okay. If you're going to give yourself a larger stop, of course, with GT 500, it's a larger trend. You give yourself a larger stop, you trade smaller. Okay. Now, going back to this, I have a 4 out of 6 here. And you see right there, everything changed, right? I need a close. For me, it's a close. If you cannot stomach this right here, if you can't stomach that, well, you're trading too big. Okay. This is just basically, oh no, an average day. It is an average day. That's nothing to fret about. It's drawdown. Okay. I've traded small enough to allow myself to be wrong all the way down here. Okay. So guys, give yourself grace. You don't have to go ahead and choke your trade and trade it so tight. There's really no point in trading it tight. If you're going to take the trade tight, that also means you're going to take your profit tighter. It doesn't really make much sense. So what you would do is you trade small, give yourself grace, give yourself a larger trend, and let it pan out. If you cannot stomach the loss on that, you shouldn't be a trader. I'm just being honest here. If you are a nervous tick and you're constantly looking at your dollars, you should be a trader. Go find something else to do. Go knit a towel or some shit. I don't know. Anyways, back to the trade. Uh, Here, we'll just let it go. I'll be objectively wrong here. Now, but when you look at price action, we can see how things are pretty freaking flat. They're pretty freaking flat. And, sometimes it's just a matter of like, you got to shoot your shot, accept the loss if it's a loss, or accept the win if it's a win, and just keep it moving. Right? We can't force trades here, guys. It's really, really important. When I saw yesterday in the Discord where some people were just sitting on their hands and not forcing trades, that made me happy. People who were insisting on trades happening, that made me not happy. Right? I want everyone to subscribe to the thought process that you trade your plan and the market has to come to you. Okay. So we have a close here, which is underneath the band there. And that is pretty much my plan, right? If I got to the other side of the band on a close, I have to go ahead and close the trade, right? That's one of them. The other one was GT500. In a choppy market, in a choppy market, trade smaller, give yourself much more distance. That's one way you're able to withstand a choppy market. And this is the reason why. Because if you give yourself a larger range and you're trading smaller, you're essentially giving yourself more time to identify the chop. But you're only risking a loss on one trade as opposed to death by 1,000 cuts. Okay? Does that make sense? Gerald, hello, quarantine, what's up? But does that make sense? I want you guys allow yourselves to do that. Trade small enough, right? So that you can allow yourselves to identify the chop. Okay. For me, GT500 is just a great way of allowing yourself to be wrong, right? Because it gives you a whole entire range to play. Again, if you can't stomach this right there, if you can't stomach that, don't bother being a trader. Okay. Now, I want to talk about GT exits really quick. Okay. Because another thing is, I have not been told to get out. That's another thing, right? Have not been told to get out of the trade. And I want to showcase some things to you guys. Okay. This was yesterday. This was a trade design down. And this happened at about 9:40. Get a close 9:45, trade design down. You got an exit here. Trade design down once again. There's a level there, so you knew better. You don't take that trade. You close it here, trade design up, you end up closing it here. So what I'm looking at is one loss and two wins on the day, right? That's really all I'm looking at. And then this here doesn't even count. This trade here, right there, that doesn't even count because that's 145. Anybody trading this time frame, you deserve to lose everything. You just deserve to lose everything. Like anybody trading after 11 a.m. complaining about like they're losing money, you just deserve it. Like seriously. So if you zoom out, we could see many instances of there's a trade design up. This is 9:30. I really don't touch that, right? We get a bounce here. And we get a continuation up to you can get a break even or we get an exit. Honestly, it just kept on going. Okay. This system is designed to keep you safe for the most part. You see, we get an entry here, get a break even point there, right? So you enter, it stops you out. You're going to get stopped out on the break even, right? There you go. Entry here, exit there. Entry here, exit there. If you zoom out, guys, if you look at all the trades on NQ, you will see that there are more green take profits than there are red exits. More green take profits than there are red exits, meaning you're winning. You guys are winning. So you have to be able to, there goes one red. You have to be able to trust the system. But where does that red happen? At market open. This is why we don't touch anything until 9:45. All right. Just red right here. After the market open. This is GT exits. Now, here is where you get beat up and chopped up. This is a trade we don't take. This is a trade we get beat up. We get an exit. This, again, there's a level there. We don't take. This one gets us to break even. This is a chop day. But if you allow yourselves a very, very small position to be wrong here, you'd be able to identify that, hey, it's chop. Okay. That was a range. Here we go. Profitable here. And also be mindful. Be mindful of these chops. It's like you really don't get developed MECD histograms. Keep that in mind. Right. Nice developed MECD histogram. See, beautiful. There's an entry. That's a take profit. Now, everyone's obsessed with trying to capture most of the move. Like, how does that make sense? How does that make sense of trying to capture most of the move? It really doesn't make much sense at all, right? Zombies, what's up? Right? What makes sense? Trying to capture most of the move is dumb, right? Because trying to capture most of the move, you subject yourself to a whole lot of unknown, a whole lot of risk, as opposed to securing the known, whether that be your 1 hour, your 1.5 hour. It's really like mind numbing where, you just see people like just trying to like run it for as much as they can. It really doesn't make much sense. It doesn't because the power, okay, think about it like this. Think about it like this. So if if you were letting it run for a 3 to 1, and I allowed it run to a 1.5 to 1, I closed the trade. I closed the trade, it retraces. And then I re-enter the trade based on the same conditions that validate the trade, and we have multiple confluences and things are staying in the general direction. I'm actually making more money than you are because I'm compounding 1.5 twice as opposed to holding for 3. It doesn't make much sense, right? The guy compounding 1.5 is going to make more than the guy who's shooting for 3. It's just math. It's just math, right? And the guy who's building his portfolio in compounding will make more money than the guy who's holding and then and hoping for a return. This is the reason why we have day traders who are able to do 20% in a week, whereas the market's returning 13% annually. Make sense? Yes. So here we go. Right. We have one condition met of when I should exit. We have another condition met when I should exit. This is my final condition of when I should exit. I've traded small enough for it. Right. Now, if this was 10 contracts, I would certainly trade it tighter. Right. John, what's going on? So trade small to allow this to be. If you're wrong, you're wrong. You're wrong, you're wrong. Can't be scared of losing. As a trader, being scared of losing is like being a boxer and getting scared of getting punched in the face. It just doesn't make any sense. It's not the sport for you. Not the sport for you. Okay. Let's go ahead and take a look at ES. See what ES is doing. Maybe ES creates some opportunity. Who knows? All right. So ES is trending down. So you had an entry, didn't pan out. But what I like about this is you got out before you hit your -1 hour, right? So the other part of this trade is you got an entry and a level right there. That's the other part. So that's not sexy to me. I will want to see a break of this level here at 67, 64, 75. I want to see that break of the level and then take it down to here. Okay. And size accordingly. Another thing is sizing. Um, when we start a trade, right? I want you guys to think about, okay, let me see. All right. Do I have everybody's attention? I want you to think about it this way. If I have a target that's a 1.5 to 1, and I know the frequency of hitting the 1.5 to 1 is going to be 65%, 70%. And if I want to improve my probabilities of winning that trade, I'm looking for a 0.75 to 1. Right? It's hardly a 1 to 1. But in a trade with high conviction and high confluence, if you're targeting a 1.5 to 1, you add to your position to cut the distance in half and improve your probability. So here, I'll go short here. And I'm going to set my target here. Now I have to go ahead and check out my NQ trade. Let's see. Right there. So NQ, what are we doing here? Now NQ is wrecking all hell for me, right? It gave me an exit signal, so I have to exit. I have to exit. We have an exit signal here, right there. I had to exit. So what this has done is it has discounted my total overall risk. Because I sized for pretty much all of GT, this has given me a discount on risk. Does it make sense, guys? Yeah, can I get some thumbs up if that's making sense to you? So let's see. Yes. Okay. So when you're in a trade and you're looking for the 1.5 to 1, and you have full conviction in the trade, shorten the distance, right? Add to your trade. But it's important to trade small. It's also important to use a fraction of your planned allocation. So what that means is if you were planning on using one ES, allocate with two MESs and scale in. Guys, everyone's so caught up in making the most amount of money where the only way you can make money or the only way you can make the most amount of money is if you got the least amount of risk. That's the only way. When I look at students' P&Ls and I look at their risk to reward, I can see how we can make them a profitable trader if we mitigated the risk and mitigated the risk only. Okay. So, I mean, yeah, it's trade smaller. You trade smaller, you're going to make more money. You trade smaller, you hold longer, you make more money. You're going to make more than a full allocation. 100%, right? You're going to make more than a full allocation. Now we got some people in here. It's been a while since I've done a live stream, so I'm assuming not a lot of people got the notification, and I let everybody know in the Discord know. I let everybody in the Discord know it was live, so um, nobody's here. Cool. Let's see. Um, Jesse is like, I'm here. There you go. Thank you. So let's go ahead and look at GT exits. Um, Now GT Ultra exits is part of game trades only. You still need Titan GT Ultra in trade 1348. So if you got Titan GT Ultra in trade 1348, that's awesome. You still got to go to game trades to get the second part of the indicator. Um, Sorry, you got to create value in that community as well. So if you want to go get it. Um, Here, this is ES here. Gave you a break even. And honest to God, that break even is beautiful. Yeah, there should be more likes. So it's just disappointing. There's only 97 people here as well. So we got a break even here. This is ready to go long. So guys, when you get a break even and you get stopped out in the trade design, unless it comes back to your entry point, the trade's over. If you get stopped out, the trade's over unless it comes back to your entry point. Okay. You get an entry here, you hold, you get the exit there. Right. And what we're doing is we're putting a lot of value on this line here, right? This GT 500 line. There's a lot of value in that. Okay. Let's go ahead and see if it's just a lot of chop, you see, right there. Right there on a close, right there on a close, a level. Jeez. We go to NQ. I want to see if I can make some money back. And so clearly it's chop. It's- Guys, this is horrible. You could see how like that BCD right here. It's just you know you're a chop when the MACD doesn't even look as clean as it would in after hours or pre-market, if you will. That's a damn shame. You see, much cleaner here than it is right here. So no volume. I think everyone's just licking their wounds after like Netflix just wiped out entire retirement accounts yesterday. Jeez. But there was an exit signal here. I'm just gonna go ahead and wait for another trade setup. I'm just gonna wait for another trade setup. So the number one skill in trading is being patient. The less you have the skill set or develop the skill set to actually play within candles or between candles, that type of thing. I advise most of you don't do it. Just trade trends. Slow it down. Many of you have 9 to 5 jobs. How many of you have a 9 to 5 job? Like, how many of you are just working 9 to 5s and you're like, okay, I gotta make my money really, really quick so I can get off to work. Yeah. So your time constraint is your nemesis. So what you're doing is you're attempting to accelerate the market, and therefore you have an obligation or a sense of obligation or duty to make money, right? And so we tend to impose ourselves on a market based on what we're feeling or what we're dealing with or what we have to do. If we have to go to work, listen, still. Look, if it's not your time, it's not your time. If a trade doesn't show up, a trade doesn't show up. Get your ass to work. It'll be miserable. I mean, honestly, I'm sorry, just being honest. Okay. It's just not your time. The trade didn't present itself. I rather one practice discipline and not force a trade than to force a trade because when you force a trade, you're not getting good reps in. You're not getting good reps in when you're trying to force a trade. And then of course, if you win the trade, you develop bad habits. Don't do that. All right. So let's go back to the charts here. You got nothing to do. I mean, the market got me once, and it's like, man, there's nothing to do. It got me. Like, it got me, man. Right here. There's nothing to do. Hey, Fidel, good morning. The semi-CD and this trend on ES. Okay, we broke that level. We have a lot to do now. 6 contracts in. So it broke this level right there. And because I have a lot of space to work with, we have a nicely formed MACD. I'm going to be extra aggressive here, right? Because guys, I got to make money. It's bills got to get paid. So what did I just do there? I spoke my subconscious out, right? And so I'm also human. Everybody's going to say, well, I got to make money. And I think when you hear yourself saying that, just pause. Just pause for a second and look at the chart and make sure that the chart is showing you that you can make money and that you're not imposing on the chart that you have to make money. Okay. It's a very, very, very different thing because we see what we want to see to meet certain conditions, especially when we're coming with a predetermined bias of what we have to do objectively, right? I have to make money. I got bills to pay. That extra pressure will creep up on you. Well, although it's not even pressure for me, it's just the fact that I do this professionally and I like to make money. But You got to make sure that when those thoughts creep in, you pause and you look at the trade objectively. It's so important that you do that, because if not, the market's just going to have its way with you. Great. At the Queen's Stable, new here. So, I mean, we're looking at ES. ES broke the level. You take the trade down. It's barely broke the level. So we're in this trade. I'm in this trade. And, you know, if I end up losing this trade, I'm just pretty much done for the day. That'll mean I've lost about $3,500 on the day. I'm just gonna go ahead and say, okay, not today. Right? Clearly, I'll make it up tomorrow or a day that gives me an opportunity. But with ES, it looks like the trend is our friend here. We're just gonna wait for this to develop. Down $450, down $150. Okay, now we're green. And we're gonna target this level here. So that's doable. Right. We'll see what happens. We'll see what happens. So yeah, hey guys, this is a crappy market. My God, super crappy market. Um, Tobacco, what's up? So Mike D, I got my order filled. Nice, I got my order filled right here, right at that level. I have my take profit right there. I don't know if you guys heard that. Who had their who had their take profit right here? There you go. Right there, take profit hit. Nice. Nice. Ooh. Jeez. That was annoying. Got it. Done for the day. I had that. Looked away and heard the ding. That's it. Got it. Nice. Okay. So, what I want to show you here. All right. Where was my? Let's zoom in here. I want you guys to pay attention to this. Right there, that was 0.78. Right. So if you saw, I did 12 ES contracts down. So I started with 6, I went down to 12. I don't, sorry guys if I didn't show my screen. Maybe I did. But instead of 6, I did 12 to shorten the distance at 0.78 since I planned on taking profit there. That would have gotten me my 1.5. Okay. Which means that now I can play, and I want to play aggressively. Nicole, she likes the new update. Glad you do. All right, can I get some hands up? Who likes the new update? You're really not getting the full-on experience unless you get on over to GameTrades.com. It's a thing. It's a thing. My God. Yes. Good. All right, we got our hands up. Now that the market decides it wants to be a mover, look at that NQ. Sweet. Let me show you something. Linda. This is NQ. If I had not accepted I was wrong here, right? It gave me an exit. I was sizing for GT, but this saved me, right? Not only did it save me here, but it saved me here, right? This emotional damage right there. Very aggressive stuff, right? How many points was that? That's why you got to trust the system. The system's going to be objective. This is 66 points. Wow. 1,200 bucks? 1 IQ, 2,400 bucks? 2 IQs? My God. Okay. So that was a very aggressive move down. Now, we go back, zoom on in here. We have a take profit at a 0.4 to 1. That's a level right there. You know, man, and AQ's just been moving large, big. Damn, I should have took that entry. So I'm just going to do this here. So 2 IQs down. There we go. We're going to be profitable. Now, I'm going to pay very, very close attention to the 0.41. Pay very, very, very close attention to this, right? Because I would have to see what's happening there. It's coming down, right? So I am going to take a profit there and then play a continuation, right? So we got two NQ contracts right there. You guys see? It's being a pain in the ass, right? Okay. I'm going to set my buy order right there. Okay. And we're going to see if it hits. Got a buy order right there. And then on the other side of that, we can sell. You guys see what we just did there? All right, cool. It hit my take profit. Now I got a sell order on the other side of it for the continuation. So we did that. We're playing the level, but I put a sell order on the other side of it in case there was a continuation right there, right? So, I mean, yeah, we definitely made some money on there. That was a quick scalp. It was like 500 bucks, right? I'm gonna take what the market gives me. This is so important, guys, to take what the market gives you, not what you think you deserve. I work with a lot of people, and some people are just like, you know, well, I lost X amount of dollars, so I want to make all that back. I don't give a fuck. You want to make all that back, honestly. Like, that's just the wrong mentality. Right? Making the money or trying to make it back is what dug you in a deeper hole, anyways. What I'm trying to do is make you a better trader. So, having any type of expectation in the trade is just like it's dumb. You have to take what the market gives you. That's what makes you a good trader, right? Not I see guys are like, yeah, I made $10,000 today, but they put $30,000 of risk to make 10 grand. It's like you're a shitty fucking trader. You're a shitty trader. Oh man, right? Again, we try to validate ourselves as good traders or bad traders based on how much money we made in a trade. And it's really, really interesting, right? Because when you go ahead and when you win a trade, you start feeling good, start posting it, start talking about it, like I mean, X amount of dollars, blah, blah, blah. I don't really care about your trade, what you make on the day, right? How much did it cost you? Anyways, coming back to this, what the market's done, right? What the market has done is given me another opportunity, right? To do it again. It's made itself cheaper. Now, if we go ahead and add something like, let's go ahead and add the RSI. Let's add this here, right? Especially in days like today, right? It's trending down. Cool. Damn it. I wanted to show you guys something, right? But this was the play, right? It came back up closer to entry. The thesis is still valid. But let's change the RSI. Let's change it from spear strength to traditional. And traditional has us at 28.08. Okay. When we look at this, we could see that it's around here that you tend to bounce. Look at the values, known values. This is 28. So knowing that, I'm going to sit on my hands. Knowing that our size extended and we have historical points here where it's come down to these levels at 28 points here at the RSI. Let's zoom on in right there. It's 28. I can't see it because my ugly head is in the way, but this is about 28 on your chart, guys. So let's see. Are we going to fail at the band and come back down? I am very, very nervous in this range because of the RSI and being overly extended here. And of course, because the market's being choppy. And of course, because we have, there you go, all in the same ranges. Mm, I don't like it. Who's having fun here? Who's learning something? Time to play it up. All right. So back here, I'll go short. Okay. So now let me explain my logic here. Right. I have to go short based on my bear setup and based on the condition of this trade, right? I also know what my risk is going to be up here. But I rather get my entry up here than, but it's extended down there. Um, so I hope that makes sense to you guys, right? Like if you were gonna go ahead and, get your entry down here and you were like extended all the way, right? You know what I mean? So nice. There's a nice little scalp. We're gonna see how much money we make here. All right. 700. Let's see. Zoom it down in. 610. Great. So I don't want to go ahead and like get it right at that level. It's first in, first out for me, right? And so also considering where this thing is, I think I'm going to be a little more inclined to protect my trade. Okay. So I'm going to buy my stop and I'm just going to bring it right here. So the reason why I have my stop there is because this guy is way overextended. So when I'm in a position of uncertainty, I always lean in the direction of risk. What's my risk? Right. And this, I was up 770. Right. So I'm either going to make over 1,000 on this trade or I'm going to make nothing. Here we go. Let me see. You guys see that there, right? Sweet. There's over 1,000. So right there. Oh boy. It just doesn't like it right here. So again, come on. I had my chance at 1,000. I'm going to take my $1,000 right there, right at that. Okay, nice. Right there. I'll just take that. We're done with the trade. Okay. So what I was doing there was I was trusting my bear setup checklist. I had a yield to my other side because it was overextended, right? But it gave me a better entry, right? Because when we're going short, you know, we sell high and we buy lower, right? It's inverse. So I was waiting for that reentry up. Now, I think I'm done with this, right? Because yeah, we go ahead and we look at RSI here, zoom on in, you see it's picking up. It's picking up. So I honestly I would love to get another entry up here. I don't know if I want to put an entry down here. And you know what? The market could prove me wrong and say, hey, yeah, we're gonna come all the way down here. But I'm just trading the opportunities the market's giving me. And I'm not going against what the system's telling me. And basically we had an entry, we played as close to the entry as possible. We got out of level, we did that twice. Make sense? Oh boy. There you go. Right back down to that level. There's something about this level right here. Um, There we are in ES right here. ES came down to a level 1.37. I got out here, came down to 1.37. That's cool. Pay attention to RSI right there. That's going to be 2662. Again, way oversold. But you can't sit there and say reversal, right? Because that'll go ahead and say, all right, well, you're putting all your emphasis here, right? In order to start eyeing a reversal, guys, you will want to see you will want to see a couple of things. RSI is just dying, right? But you want to see a pivot come the other way. You would also want to see that MACD go from, a deep red to like a lighter pink. You would want to see this break on the other side of the band, right? You don't want to hunt reversals because yes, it can't keep falling. We do have a zone all the way down here. This is where the market wants to go. Holy hell. Holy hell. But then I think about it. That's 50 points, huh? Yeah. Wow. Okay. Woo. No, we're good. We're good. If I were to take this trade, I would wait for it to come back up to this level and then size accordingly, of course. And target this level down here. Let's zoom that out. Let's see. I mean, there is a level right there. But okay. Back to NQ here. This yes. Basically my hedging chart. Okay. Will this go further? I don't know. That's the balls all in. Decider, no, no, you're not. You're not balls all in. No, you're not. No, you're not. Please don't be. Jesus, it's not a casino. It's not a casino. Um, Yeah, I know. But Vinny, if there's other people watching, everybody, time to play made 10K this morning. On how much risk? There wasn't much move. There wasn't much of a move to make 10K. There's there. Oh my God. Anyways, wasn't much of a move. Um, on what risk? All right. So we got the exit signal here. This is great. Where the hell did my indicator go? Update to the latest version. Sorry, it's still me update. Version 1.1. Oh, there you go. Yeah, it's hitting that take profit on Ultra and NQ. But we got, let's, this was just sick, right? Zoom out in. It says just get out right here. Get out right there. I mean, on the 15 minute, let's say get out right here. Oh my. Let's go back to the 5 minute. The signaling to get out right here. So for me, we got to look at our settings here. We got to look. I want to show you guys my Ultra settings so you guys can understand what's happening here. So my take profit type is always going to be predictive levels. Okay. Um, my predictive level take profit range is 0.5 to 2.25. My break-even action is going to be a risk to reward ratio, which is going to be a 1-to-1. So basically, when price action has broken a 1-to-1, it's going to alert me to break even. So I basically remove all risk from the trade and I break even. And it's going to alert me. Then ATR slippage. This is 0.2. This is our offset. You're going to have an ATR slippage for take profit and break even. This is going to assure that you take profit just before the levels so you don't get caught in supply and demand. And then when you set your break even, it sets your break even a few ticks above your entry so that you can cover fees. So that's what that is. So most stop to break even, guys, you want to do this once per bar because it you really, really want the alerts to be firing off as fast as possible. Your exit alert, especially, is once per bar, but everything is on close. So that's what you want to do. Now, is I'm on in. Sorry, guys. So it's once per bar, once per bar. Now to visualize take profit target, this is what it looks like. You can toggle these on, and I'm going to show you what this looks like. So it visualizes for you. This would be a take profit zone based on the fact that I'm setting my take profit from 0.5 all the way up to 2.5. And that actually happens before my break even. Now, this is going to keep you honest as hell in all of your trades because if it finds a level before the planned take profit, it's going to force you to respect it. It's going to force you to say, okay, well, that's going to be my take profit, even though I would hope for something greater than a 1-to-1 so I could take the risk off the table and be break even. But there's a level there, so you have to respect it. The system is designed to respect levels. And for those who are having like mind blowing moments, like, oh my God, the system works, it's so great. The reason why it works is because it respects levels. Does that make sense? So back to this, you got a break of the band. So you got an exit here. Right, you should exit where the slide was down here, got to your exits. This visualizing will really, really, really keep things in perspective and keep you from being deer in headlamps. Okay. Now we were worried about this. This is what we talked about, right? Right there. This is what we talked about. All right. I even though I don't have a trade design, I'm just gonna go the other way because this is what we talked about, and we got an X here. So I'm not saying for you guys to do this. What I'm saying is like it just makes all the sense in the world within the system. So you could wait for the next trade, or you could take your shot here. And the reason why I'm taking my shot, let me explain to you guys why I'm taking my shot right here. Let's zoom on in. The reason why I'm taking my shot here, which I entered the trade, right, is because the distance to me being wrong objectively, right, where this comes to the other side of the band is so small. You see what I'm saying? Does that make sense? The reason why I take this risk is because coming to the other side of the band, that risk is so small. So I have to take it. That's the only way I will take a trade like this. Does that make sense, guys? And there we go. I want to recap that. Does that make sense? The only reason why I'm taking that trade is because I have my risk set on the other side of that band, where it comes to the other side of that band, I'm wrong, right? This requires discipline. So Jesse, he gets it. Anybody else getting it? We get thumbs up. Who understands this? Back on this trade here. Such to play. Doesn't understand the indicators, so none of it makes sense. All right, well, figure it out. Paper trade. Take the time. So, you know, we're up a decent. We're up a decent amount. Right. Um, cool. So you guys notice that everything that I do here is predicated on my risk. Right. So what I can do is say, all right, it comes back down here. That's the stop. Now I'm not going to go ahead and set a break even because it's still very, very, very close to break even. And technically I am trading against the trend. So I would have to wait for this to come down here. All right. Otherwise, next time I see $400 profit, I'll just take the $400 profit. So JMac, I'm actually front running. So you can wait for it to go green, but I'm front running based on a condition that I'm wrong on the other side of the band. And I'm going to be 100% disciplined on that. You see what I mean? So you can wait for the close and the shift on green, do your thing, or you could say, all right, well, I know I am objectively wrong if price comes to the other side of this band. Does that make sense? Right? If price comes to the other side of this, I'm wrong. If it closes on the other side of this, I'm wrong. So whether, this gets closed green or, it's happening, whatever's happening right now, as long as you visualize where you're wrong, you're good. But you absolutely have to respect it. There's no negotiating here. There's absolutely no negotiating here. You're wrong. You're wrong. So here we go. We're up a decent amount. All right. Now we got it green, right? Now it's green. So what it has done is because it went green, it's giving me additional confirmation, right? So we're now 2 contracts, add 2 more contracts. It went green, it gave me additional confirmation. Still, same rules apply. Breaks the other side of that band there, and I'm wrong, right? There you go. It closes the other side of that band, I'm wrong. We got a green band. Nice, okay. All things looking good. I'm green here. That's all that matters. All right, we're up $700. We were up $700. 770, 890. Here we go. 1400, 1900. See what's happening here, right? See what's happening here, right? So I went ahead and gave myself a definitive risk right here. I got confirmation on the band change flipping. I added to my position. It took off. We're up 2K. Nice. Decent trade so far. Where are we going? You know what? Doesn't matter. Guys, is $2,000 on a trade good? I mean, is it good? Is that or should we be ever more greedy? Or is it good enough? 2K is good. Okay. 5K a day. That's child's play, bro. All right, 5K a day. If you have a $500,000 port, dope. 5K a day. That's over 100 grand a month. You're golden there. So make sure about 2,600 and we'll go here. All right, we're up 3K. What I'm going to do is set my stop and I'm just going to bring it here. Oh, now I'm up 3K. Looks like it's approaching 4K, maybe 5K on the trade. I'll take the trade. But what I've done now is I have zero risk on this trade. And let me explain something to you. Yeah, I'm up 3K, right? But that is a suboptimal trade, meaning this was it worked out. We traded the plan and it's working out, right? And so we are trading against the trend. I'm still more focused on my risks than, let's say, taking profit. In order for the trend to shift, it has to come up way the fuck up here. I mean, it has quite a ways to go, but we know where the market's been, right? So the probability is pretty damn high. The probability is also higher that it stops me out. So we're looking at 4K. Let's see, guys. We're going to close this trade once we hit like 5K. Once we hit 5K, we close the trade. We got 19 seconds left, right? Because I'm up so much, I can dollar cost average. Watch this. By 2 more, my dollar cost average goes up ever so slightly. I modify my order there. I modify it to 6. Now, I dollar cost averaged up. I'm still protected there. We're still protected, but I dollar cost averaged up. I waited for the trade to develop some, and I dollar cost average up. Now, the reason why I'm doing that is because it's affording me the opportunity to scale in without risk. You absolutely must do that. You have to allow yourself to scale into a trade without risk. And what I did was I let it give me a whole lot of room, and I just added 2 more contracts. Does that make sense? I was able to scale in without risk, meaning I put myself in a position to make even more money with absolutely no risk. Make sense? We get there? So what I can do now is just take right there, boom. So we're up 5,200 bucks. We're up 5,600 bucks right there. We're doing it, guys. We're doing it, guys. This is how it's done, baby. This is how it's done. So this trade is either going to make me all the money, or I'm still going to make some profit here. Surely not 6K, but this is a free and profitable trade. Nothing goes red for me. Nothing. And guys, I do this all the way up to 20 contracts, where I'm just adding and adding and adding, right? So let's see. You see this right here? That's a GT flip. I'm going to treat that as a level. And that's also going to be a take profit. So we're going to see, and I'm just going to keep my finger right here, see what's up. Let's go ahead, zoom out. So, oh no, I could have made 6K, huh? But there's no stress in this trade. There's, we give zero fucks about this trade. I I can scale in even more and know that my dollar cost average is still protected. I can still protect this dollar cost average. Right. So that's the moral of the story. Scale in when you're winning as long as you can go ahead and protect it. It's a beautiful thing. We're not going to go ahead and buy 6 more. We go ahead and do 2 more, right? So if we bought 2 more contracts, let's see how much it moves the dial here. So we're going to buy 2 more. Look at that. I bought 2 more and I'm still protected. Let me go ahead and modify this and change this to 8. You see what we're doing here, guys? You see this? It's marvelous. It's marvelous. There's zero risk on this trade. I have scaled rather big. I'm big now. Wish I had another chance to tell her that. Hey, I'm big though. Sorry for the disappointment, you know. But Zavi Solomon, I'm glad you are. So yeah, guys, we're killing it. We're killing it, right? Sweet. Look at that. 9 seconds to go on that candle. And, we're up a decent amount. Again, zero risk. Zero freaking risk. Can we get 7K out of this? Oh, this seems reasonable. We got 5K. Okay, so here we go. You guys see where the band is? Right there? Right there? Right? I'll set it right there. It's either gonna come all the way up here or still gonna make money. Like, see if I care, see if I care. It's either gonna come all the way up here or it's gonna come down here, but I still make money. This is how you trade. You prioritize risk over dollars. When you prioritize risk, you end up making money. And when you make money, you're not losing money. That's why we say when we trade, we focus on not losing money. Because when we focus on not losing money, then the opposite is true. Correct? Right? There's really nothing to do here. I would have to go ahead and just gonna set my sell limit. That's gonna be right here. Just shy of that right there. Oh boy, it's coming. That's what she said. Real Chris, we added a lot. It's a literal game changer. Where are we going, boys? Are we gonna get the freaking 6.5K or the suspense is killing me. I'm just gonna bring it right to the top of that band right there. Cool. Where are they gonna make money here or make money here? It just really doesn't matter. And it got me out. But we still made money. It was worth the shot. Hey, folks, that's how it's done. Great. Sometimes you win big, sometimes you win little, but as long as you focus on winning through risk management, all's good, baby. It would have been great. It would have been great that the market came up here, right? It would have been great. That's ideally what I wanted, but I have to take what the market gives me. Well, I hope you guys learned something here. It is 11 a.m., which means I stopped trading. Signing out. Peace. We're going to end this broadcast. The broadcast. Yes. Rowdy.